Hi, I'm Casey from Century 21 Novocastrian, and we're back in the office with Nick Ball from Inovayt Finance. Thanks for coming in and chatting again.
Thanks for having me again, Casey.
So you're welcome. Last time we chatted about rental income and how that's used to service mortgages. So we thought we'd just extend on from that now and talk about investment strategy. So a lot of what we're seeing in the market and what we're talking with our investor clients, ours and yours, is about the land ratio. So let's dibble a little bit into that further and explain what is that.
Absolutely. So I guess on the back of the last 6 to 12 months, a lot of our more successful investors have become so much more strategic about how they are selecting the properties that they want to buy. So the land to asset ratio essentially is just the land value per square metre times by the square metres of the property divided by the actual asset value. So the asset is obviously the property.
Purchase price. Or
the property that's sitting on top of the land essentially. Yep. So just understanding that ratio of, what's the land and what's the asset.
Yep. And ideally a good land to asset ratio is...
Roughly, I guess the baseline that everyone's talking about is about 50%.
Yep.
But what they're really targeting is up around that 70%.
And obviously there's pros and cons for different strategies. So obviously the pro in this scenario and purchasing is obviously capital growth.
Correct. So a lot of investors, particularly in this market, are really chasing that capital growth to build wealth.
Yep.
So what they're saying is that the land value is actually what attributes that capital growth. So that when people are talking about that 6 to 7% growth per annum, it's the land value that's going up, because obviously they're saying the asset is really a depreciable. So they're really focused on, where are those areas and what sort of, land is going up the most.
Right. And then we look at the downside of this, and obviously there's a pro and a con for everything, but obviously we believe the pros outweigh the cons, but on the downside is just that rental yield, isn't it?
Absolutely. So obviously in a lot of those areas where the land to asset ratio is in favour of the land, so up around that 70%, when we're seeing that the rental yield itself for the income side of the thing from the property is not as high. But yeah, so the investors that are chasing that, obviously they're understanding that they can, still afford the mortgage without just purely relying on that rental income. Yeah.
Yep. And we're seeing more growth. So if we'll put a scenario at the bottom of this video, just say on a $500,000 purchase, where there is that higher end land value or ratio, opposed to chasing rental yield as such. Because if you look at your numbers in relation to capital growth over, say, a 10-year period, to your rental yield. So if you're chasing a higher rental yield over a 10-year period versus higher capital growth, you'll actually see that the capital growth will outweigh that rental yield every time.
Yeah, absolutely. And I think those case studies are really important to look at when you're making those decisions.
Yeah, and just understanding, I guess we're trying to just educate in understanding that investment strategy. So understanding what your end goal is. How long are you looking to hold the asset? Are you chasing just income? Are you chasing growth? Obviously the growth strategy is a longer term plan rather than a short term plan. So if you're looking more short term, you're probably looking for that higher rental yield.
Yeah, and absolutely. I guess that's probably on the back of a lot of these conversations we're having. It's very generalised advice, so it's not tailored specifically to one person or another. But we're just, sharing these ideas and things that we're seeing out there in the market that obviously they open our eyes. So we just want to make sure that everyone else is
aware
about it. Yeah,
and knows. So. As Nick said, this is not tailored advice. This is what we've seen from our experience and our roles in that market, within investing. But obviously you need to speak to a financial planner. So to understand your strategy, to plan for what
your future holds, really,
yeah, you need to speak to a professional and get tailored advice that's specific to you. I can never say that word. Anyway, so that's us. That's our input in our quick video for today. If you have any questions, please don't hesitate to reach out to either Nick or myself. We're always here to help, and love to chat about what's your investment strategy and how can we help you along the way.
Absolutely.
Thank you.